If you're a homeowner and you've built up equity in your property, you may have heard people talking about something called a cash out refinance. And for the right situation, a cash out refinance can actually be a very powerful financial tool. Today, we're going to walk you through the top 5 reasons homeowners choose to do a cash out refinance and when it can make sense financially. But now, before we jump into that list, let's quickly explain what a cash out refinance is. A cash out refinance is when you replace your current mortgage with a new loan that is larger than the balance you currently owe, and you receive the difference in cash. So instead of selling the home to access that equity, a cash out refinance allows you to access some of it while continuing to own and live in the property. So let's talk about the top 5 reasons homeowners consider doing a cash out refinance. But before we get into it, if you have any questions on anything, reach out to us anytime. Our contact info is in the link in the bio. It's in the comments and in the description, so we want to make it super easy for you to be able to find us. Reason number 1 is home improvements. This is one of the most common areas and often one of the most strategic uses of home equity. Many homeowners use a cash out refinance to fund renovations or major upgrades to their property. This could include remodeling kitchens or bathrooms, replacing a roof, upgrading HVAC systems, adding living space, or improving energy efficiencies. These types of improvements can make your home more enjoyable to live in while also potentially increasing the value of the property. So using equity to reinvest back into the home itself can often be one of the most productive uses of that equity. Reason number 2 is debt consolidation. Many homeowners carry high interest debt in the form of credit cards, personal loans, or other consumer debt. Those interest rates can sometimes be dramatically higher than the mortgage rates. By using a cash out refinance, some homeowners choose to consolidate those high interest balances into their mortgage instead of managing multiple payments with high interest rates. Everything can be rolled into one mortgage payment as long as you have the equity and you qualify for the loan. So depending on the situation, this may reduce the total interest being paid and simplify monthly finances. This is one of the most common reasons homeowners explore a cash out refinance. Reason number 3 is improving monthly cash flow. Closely related to debt consolidation is the idea of improving your monthly cash flow. If someone is carrying several high interest debts, those payments can add up quickly each month. By consolidating those obligations into a mortgage, the monthly payment structure may change in a way that reduces the total amount leaving the household budget each month. This can provide more financial flexibility and breathing room in a homeowner's monthly budget. For many families, improving cash flow can make day-to-day finances much easier to manage. Reason number 4 is investing. Some homeowners use the cash out refinance as a way to access capital that can be invested elsewhere. For example, some people use home equity to purchase rental properties, invest in other real estate opportunities, or fund business ventures. The idea here is to use the equity in one property as a way to create opportunities that may generate future income or long-term financial growth. Of course, investing always carries risk and should be approached carefully, but accessing equity can provide capital that may otherwise be difficult to obtain. Reason number 5 is major life expenses, and this is a big one. Life sometimes brings large expenses that need to be assessed and addressed. This could include educational costs, medical expenses, helping family members, or other major financial needs. Because equity can represent a significant portion of a homeowner's wealth, some people choose to access it during major life moments when additional finance resources are needed. A cash out refinance can provide access to those funds in a structured way. Now, it's important to remember that just because these are common reasons to do a cash out refinance, it does not mean it's always the right move. Every homeowner's financial situation is different. Factors like current mortgage rate, the amount of equity available, your long-term plans for the home, and your overall financial goals should all be considered before making a decision. Home equity can be one of the most powerful financial tools homeowners have, but it should always be used strategically. When used thoughtfully, a cash out refinance can help homeowners improve their financial situation, simplify debt, invest in opportunities, or reinvest back into their property. If you're curious about how much equity you may have in your home or whether a cash out refinance can make sense for your situation, speaking with one of the mortgage professionals here at Morgan Financial can help you run the numbers and evaluate the options available to you. Our contact info is in the link in bio, it's in the comments, and it's in the description. We want to make it, again, Super easy for you to find us. And if you found anything helpful in this video, please make sure to subscribe so you don't miss future videos where we break down mortgage strategies, refinancing options, and the smart ways to use your home financing to your advantage.